Two of the best green energy penny stocks to buy right now are sitting at the crossroads of innovation, demand, and massive market potential. These stocks, while trading under $5, hold the kind of upside that can turn small investments into life-changing wealth in the coming months. The green revolution is unfolding rapidly, and these companies are strategically positioned in key segments of the clean energy sector that Wall Street and the federal government are aggressively funding. So today we are diving into two of the best green energy penny stocks that have the potential to make you rich. These are not random speculative names. They are companies with real assets, powerful partnerships, financial momentum, and the support of some of the biggest players in the energy world. If you're serious about making money in the stock market, make sure to watch until the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. First on the list is Lithium Americas Corporation, traded on the New York Stock Exchange under the ticker LAC. Lithium Americas is one of the most promising lithium development companies in North America, and it is focused on the development of the Thacker Pass project located in Nevada. This isn't just any lithium project. Thacker Pass is one of the largest known lithium reserves in the United States and is projected to play a critical role in supporting the domestic supply chain for electric vehicle batteries. The company's entire business model is focused on extracting and processing battery-grade lithium carbonate, a resource vital to the transition toward clean transportation and grid storage solutions. The most exciting part about Lithium Americas is the stage it's currently in. The Thacker Pass project is under development and progressing according to plan. What sets it apart from other lithium juniors is that it's already secured significant partnerships and government interest, which are often the biggest hurdles for early-stage mining companies. Most notably, Lithium Americas is in partnership with General Motors. This partnership has added major credibility and financial support to the company's operations. On April 1st, 2025, Lithium Americas and GM announced the final investment decision to move forward with the construction of Phase 1 of the Thacker Pass project. As part of this deal, GM contributed $100 million, while Lithium Americas added $191.6 million in cash to their joint venture. This wasn't just symbolic. It was a strategic move by GM to ensure control over a domestic supply of lithium for its EV batteries, and a huge sign of confidence in Lithium America's ability to deliver. And that's not all. The company also secured a $250 million strategic investment from Orion Resource Partners, a private equity group focused on natural resource investments. Financially, Lithium Americas is in solid shape. As of March 31st, 2025, the company reported $446.9 million in cash and restricted cash. It also capitalized $78.2 million in construction and related project expenses during the same period, showing that it is actively investing in the infrastructure required to bring Thacker Pass online. These are not idle plans. This is real capital being deployed. Following the Orion and GM investments, the company is now positioned with sufficient liquidity to complete Phase 1 construction without raising additional funds, which helps limit future shareholder dilution. At the time of this recording, Lithium Americas is trading around $3.06 per share, well within penny stock territory. But analyst price targets suggest substantial upside. Based on 8 Wall Street analysts covering the stock, the average price target is $3.85, representing an expected gain of about 35%. The high-end forecast is $5, while the low-end sits at $2.20. Given its fully funded status, government backing, and partnership with GM, many believe this price range could be conservative if lithium prices rise or if Thacker Pass its production ahead of schedule. The long-term potential for Lithium Americas is massive. Demand for lithium is expected to more than double by 2030 as electric vehicles dominate new car sales and renewable energy projects expand across the globe. Now let's move to the second stock on our list, ChargePoint Holdings Incorporated, which trades under the symbol CHPT on the NYSE. ChargePoint is a leader in EV charging infrastructure and operates one of the largest EV charging networks in the world. The company provides solutions for residential, commercial, and fleet customers, creating a broad and diversified revenue base. But despite its strong market position, the stock has faced intense pressure over the last year, largely due to macroeconomic headwinds and slower-than-expected EV adoption. Currently, ChargePoint is trading at just 60 cents per share, a steep decline from its previous highs. However, recent developments indicate that the company is making key strategic changes to regain its footing and unlock future growth. Most notably, ChargePoint announced on July 9, 2025, that it will initiate a 1-4-20 reverse stock split effective July 28. The reverse split is designed to raise the company's share price above $1 and bring it back into compliance with NYSE listing requirements after a deficiency notice earlier in the year. While reverse stock splits can sometimes be viewed as a red flag, in this case, it could mark a turnaround moment for the company. The reverse split will reduce outstanding shares from approximately 467 million to just about 23.4 million, while adjusting all warrants, options, and convertible notes accordingly. In the first quarter, the company reported revenue of $107 million, down from $130 million in the same period last year. However, the company has shifted focus to profitability. Subscription revenue, a more stable and recurring source of income, rose by 27% to $33.4 million. Meanwhile, GAAP operating expenses declined 18% year-over-year to $90.7 million, and the adjusted EBITDA loss improved by 25%, dropping to $36.5 million. These numbers suggest that ChargePoint's management is aggressively controlling costs while expanding high-margin services. Beyond the numbers, the company is still innovating. Following FedRAMP certification, ChargePoint shipped its first multi-million-dollar government order requiring that authorization. This opens the door for more federal contracts and government deals in the future, an important catalyst as more public funding goes toward EV infrastructure. Analysts covering ChargePoint have mixed but improving views on the stock. The average 12-month price target sits at 98 cents, representing a potential upside of nearly 50% from the current trading price of 66 cents. The high forecast is as much as $2, while the lowest forecast is 50 cents. If ChargePoint successfully executes its restructuring, maintains its cash position, and benefits from government-backed infrastructure spending, there is substantial room for upside. With the EV charging market expected to grow exponentially over the next decade, the company's leadership position puts it in a strong position to capitalize. Both Lithium Americas and ChargePoint holdings represent unique opportunities in the clean energy space. Lithium Americas is focused on supplying the raw materials needed for batteries, while ChargePoint is building the infrastructure required to power electric vehicles on the road. They're on opposite ends of the EV value chain, but both are essential to the success of the green energy transition. What makes them especially compelling is that they are not speculative fads. They're backed by major corporations, supported by government funding, and are executing on real, tangible business plans. And best of all, they're still trading at penny stock levels, giving retail investors a chance to get in before the rest of the market catches on. Well, that concludes our list of the 2 best green energy penny stocks with massive upside potential. If you're looking for early-stage opportunities that combine innovation, strong fundamentals, and Wall Street backing, Lithium Americas and ChargePoint should definitely be on your radar. Remember to always do your own research and consult with a financial advisor before making any investment decisions. Be sure to hit that subscribe button and turn on notifications so you never miss out on the next breakout stock. Thanks for watching, and we'll see you in the next one.